The current price trend for Bitcoin shows some volatility, with recent fluctuations around the $94,000 mark. While the forecast suggests a slight upward trajectory in the coming week, reaching around $95,000, the overall picture remains uncertain. Given this, a short-term investment strategy appears more prudent. This approach allows for capitalizing on potential short-term price movements without committing to a long-term position in a potentially volatile market. A suitable strategy would involve entering a long position at the current market price around $94,500. The stop loss could be set at $92,556, the identified support price, to minimize potential downside risk. The target price could be set at $95,200, aligning with the forecast and allowing for a modest profit. This strategy takes advantage of the anticipated upward movement while managing risk effectively within a short-term timeframe. Based on the provided information for Bitcoin Cash, a short-term bearish investment strategy appears most suitable. The 2-week price history demonstrates a downward trend, and the forecast predicts continued declines. Although the support price is at $422.20, the forecast suggests prices could drop below this level. Considering the risk-reward ratio, a short position offers a potentially higher return with a well-defined stop loss and target price. To execute this strategy, an entry price of $437 would be appropriate, aligning with the recent price action and resistance level. A stop loss should be placed at $447 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $422, aiming to capture the anticipated price decline towards the support level. This strategy prioritizes capital preservation while seeking to capitalize on the short-term bearish momentum in Bitcoin Cash. Given the provided price history and forecast for stacks, a cautious short-term investment strategy appears most suitable. The price history shows a downward trend over the past 2 weeks, with the forecast predicting further declines. This bearish sentiment is reinforced by the fact that the current price is close to the resistance level of $1.54, suggesting a potential for a pullback. Therefore, an investment strategy focused on a short position seems appropriate. A suitable entry price would be $1.53, aligning with the current price. The stop loss should be set at $1.56 to limit potential losses if the price unexpectedly rises. The target price could be $1.43, the lowest predicted price in the forecast, allowing for a profit margin while capitalizing on the anticipated downward movement. This strategy aims to profit from the short-term bearish trend in stacks, while minimizing risk through a well-defined stop loss. Given the provided price information for Ethereum, a cautious investment strategy is recommended. The 2-week price history demonstrates a clear downward trend, culminating in a significant drop in the last few days. The forecast further predicts a continued decline in price over the next week. While the support price of $3,069.17 provides a potential floor, the resistance level of $3,206.02 suggests significant hurdles for an upward price movement in the near term. Therefore, a short position on Ethereum appears to be the most prudent choice at this juncture. An aggressive entry price could be around $3,200, slightly above the current price, allowing for a buffer against potential short-term fluctuations. The stop loss should be set at $3,280, aiming to limit potential losses if the price unexpectedly surges. The target price could be set at $3,000, aligning with the forecasted price decline and offering a reasonable profit margin. This strategy prioritizes risk management while aiming to capitalize on the prevailing bearish sentiment in the Ethereum market. Based on the provided price information for Ripple, a medium-term investment strategy appears to be the most suitable. The historical price data suggests a fluctuating trend with an upward bias, while the forecast indicates continued growth over the next week. The support price of $2.4596 provides a safety net, while the resistance level of $2.5828 presents an opportunity for profit-taking. Considering this, a long position is recommended with an entry price around $2.50, below the current market price and the immediate resistance level. This allows for potential upside while mitigating risk. A stop-loss order should be placed at $2.46 to protect against unexpected price drops. The target price should be set at $2.65, aligning with the forecast and aiming to capture a portion of the anticipated price increase. This strategy allows for a balanced approach, capitalizing on the upward momentum while managing risk effectively. Based on the provided information for Binance Coin, a short-term bearish strategy appears most suitable. The 2-week price change shows a downward trend, and the forecast indicates further declines. While the support price sits at $685.69, the resistance level at $729.76 suggests that an upward break is unlikely in the near future. Therefore, a short position would be advisable. An aggressive entry price could be around $693, aligning with the current price and the forecast. A stop-loss order should be placed at $702 to limit potential losses if the price unexpectedly rises. The target price could be set at $685, aiming to profit from the anticipated price decline towards the support level. This strategy capitalizes on the short-term bearish sentiment and aims to generate returns within a relatively short time frame. Based on the provided information for Stellar, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent dips, suggesting a potential for consolidation or a slight correction before resuming an upward movement. The forecast price indicates a gradual increase over the coming week, aligning with this notion of a potential consolidation period. Considering these factors, an entry price of $0.425, slightly below the current market price, would allow for a reasonable margin of safety. A stop loss at $0.405, below the recent support price, would protect against significant downside risk. The target price should be set at $0.455, aligning with the higher end of the forecast price range and offering potential for substantial gains. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in a medium-term timeframe. The historical price of Toncoin shows volatility but generally fluctuates within a range. The recent 2-week price change indicates a downward trend, with the forecast price suggesting further declines in the coming week. Considering this bearish outlook, a short-term investment strategy focusing on a short position appears to be more suitable. An entry price of $5.30 aligns with the current price and the forecasted price decline. Setting a stop loss at $5.40 protects against potential upward movements, while a target price of $5.15 capitalizes on the anticipated price drop. This strategy aims to profit from the short-term bearish momentum of Toncoin, while managing risk through a well-defined stop loss. Given the price trends and forecast for Cardano, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a slight downward trend over the past 2 weeks, but the forecast suggests a potential upward movement in the coming week. This indicates a period of consolidation before a potential price increase. The support price of $0.9257 provides a solid foundation for a potential rebound, while the resistance price of $1.0951 presents a clear target for the upward movement. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $0.950 could be considered, aligning with the forecast and providing a margin of safety above the support level. The stop loss should be set at $0.925, slightly below the support price, to limit potential losses. The target price could be set at $1.080, aiming to capitalize on the potential upward movement towards the resistance level. This strategy allows for a balanced approach, taking advantage of the potential for price appreciation while managing risk effectively. Based on the provided price history and forecast for Litecoin, a short-term bearish strategy seems most appropriate. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines over the next week. The current price is hovering near the resistance level of $99.37, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at $104, the current price. A stop-loss order should be placed at $105 to limit potential losses if the price unexpectedly surges. The target price for this strategy would be $98, aligning with the lowest forecast price and allowing for profit-taking before reaching the strong support level of $89.50. This approach capitalizes on the anticipated downward movement of Litecoin in the short term. Given the price trends and forecast for Swaycoin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile period with both upward and downward movements, indicating potential for further fluctuations. However, the forecast suggests a slight upward trend, with prices predicted to remain above the current levels. This suggests a potential for moderate gains over the medium term. Therefore, an investment strategy centered on a long position is recommended. A suitable entry price would be around $4.85, aligning with the recent price action and providing a buffer below the current price. A stop loss should be placed at $4.70 to limit potential downside risk. The target price could be set at $5.10, aiming to capitalize on the predicted upward movement and aligning with the resistance level. This strategy balances risk and reward, allowing for potential profit while mitigating potential losses. Aptos's recent price history shows volatility, but the forecast suggests a downward trend over the next week. The historical price data reveals a series of peaks and troughs, indicating potential for both gains and losses. Considering the forecast and the current price hovering near the resistance level, a short-term bearish outlook appears more likely. Therefore, an aggressive investment strategy for Aptos would involve taking a short position. A suitable entry price would be $8.76, aligning with the current price. The stop loss should be set at $8.88 to limit potential losses if the price unexpectedly rises. The target price could be set at $8.28, capitalizing on the predicted price decline and aligning with the forecast's lowest point. This strategy prioritizes short-term gains by leveraging the anticipated price drop, while the stop-loss mechanism mitigates risk. Based on the provided SHIB price data, a short-term bearish investment strategy is recommended. The 2-week price change demonstrates a downward trend, and the forecast indicates further declines. The historical prices show a consistent downward trajectory, with the current price hovering near the support level of $0.2702. The resistance at $0.3941 suggests limited upward potential. Given these factors, a short position is advisable to capitalize on the anticipated price decrease. For a short-term investment strategy, an entry price of $0.389 would be appropriate, aligning with the current price and the forecast's downward trajectory. The stop loss should be set at 40 cents to protect against unexpected price surges. The target price should be set at 28 cents, aiming to capture potential profit before the price reaches the significant support level. This strategy aims to capitalize on the short-term bearish outlook for SHIB by entering a short position at a favorable entry point and setting appropriate stop-loss and target prices. Based on the provided Ethereum Classic price data, a cautious short-term investment strategy appears suitable. The 2-week price history reveals a somewhat fluctuating trend, with recent fluctuations around the $25 price point. The forecast predicts a decline in price over the next week, reaching as low as $22. This downward trend, coupled with the forecast, suggests a potential for short-term profit. Therefore, an aggressive short-term investment strategy would involve taking a short position in Ethereum Classic. A suitable entry price would be $25, aligning with the current price and the potential for a price drop. The stop loss should be set at $25.68, the resistance level, to minimize potential losses if the price unexpectedly rises. The target price should be $22.99, the support level, aiming to capitalize on the anticipated price decline. This strategy allows for potential profit while managing risk by setting a clear stop loss. Given the historical price data and the forecast for Polygon, a cautious approach with a medium-term investment perspective appears most suitable. The 2-week price change shows a downward trend, with the forecast indicating further declines. While the price is currently close to its support level of $0.3705, the resistance level at $0.4535 suggests limited upside potential in the near future. Therefore, a short position is recommended to capitalize on the anticipated price decline. A prudent entry price would be around $0.445, allowing for some buffer from the current price. The stop loss should be set slightly above the entry price at 45 cents, minimizing potential losses if the price unexpectedly rebounds. The target price could be set at 38 cents, aiming to capture a significant portion of the anticipated price decline while leaving room for further downward movement. Based on the provided information for AEVO, a short-term bearish investment strategy is recommended. The price history shows a consistent downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. Although the support price is at $0.2796, which could potentially offer a temporary floor, the price is currently hovering near the resistance level of $0.319. This suggests that the selling pressure is strong, and the price is likely to continue its downward trajectory. Therefore, a short position on AEVO is advisable. An entry price of $0.318, close to the current price and the resistance level, allows for immediate participation in the anticipated price decline. A stop-loss order should be placed at $0.329, slightly above the entry price, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.282, aligning with the lowest forecasted price, allowing for a profit capture before the market potentially reaches the support level. Given the provided price history and forecast for optimism, a cautious short-term investment strategy appears most suitable. The recent price history demonstrates volatility, with fluctuations both upwards and downwards. The forecast predicts a continued downward trend over the next week, suggesting a potential bearish market sentiment. Therefore, a short position on optimism is recommended to capitalize on this anticipated decline. An optimal entry price for this short position would be around $1.79, aligning with the current price and allowing for some room for price adjustment before entering the trade. The stop loss should be placed at $1.82, a level slightly above the current price, to limit potential losses if the price unexpectedly moves upwards. The target price should be set at $1.65, reflecting the lowest point predicted in the forecast, aiming to secure profits before the price potentially rebounds. This strategy emphasizes risk management by setting a stop loss and targets realistic profit goals based on the forecast. Given the provided price history and forecast for STRK, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level of $0.3748. The forecast further suggests a continued decline, with prices potentially dropping to $0.359 in the coming days. This bearish outlook indicates a potential opportunity to profit from the anticipated price decrease. Therefore, a short position on STRK is recommended. An entry price of $0.429, slightly above the current price and the recent low, would allow for a small margin of safety. The stop loss should be set at $0.4447, the resistance level, to limit potential losses if the price unexpectedly rebounds. The target price should be $0.3748, the support level, aiming to capture a significant portion of the anticipated price decline. This strategy focuses on a short-term horizon, capitalizing on the expected price movement within the next week or two. Given the historical price data and the one-week forecast for Solana, a cautious short-term investment strategy is recommended. The price has experienced a downward trend over the past 2 weeks, with the forecast suggesting further declines. The support price at $157.28 indicates a potential floor for the price, while the resistance at $197.46 suggests that upward momentum is limited. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $188 could be considered, aligning with the current price and the downward trend. The stop loss should be set at $192 to protect against any unexpected upward price movement. The target price could be set at $175, aiming to profit from the potential decline towards the support level. This strategy prioritizes risk management by setting a stop loss and targets a reasonable profit while acknowledging the bearish outlook for Solana in the short term. Based on the provided price data for Jupiter, a bearish investment strategy appears more suitable. The 2-week price change shows a downward trend, and the 1-week forecast suggests further declines. The historical prices indicate a consistent downward movement, with the price currently below the support level of $0.7273. This suggests that the asset may continue to depreciate in the near future. Considering the current market conditions, a short position on Jupiter is recommended. An aggressive short-term investment strategy could involve entering a short position at $0.801, the current price. The stop loss should be set at $0.829, the recent high, to limit potential losses. The target price could be set at $0.7273, the support level, aiming to capitalize on the anticipated price decline. This strategy aims to take advantage of the bearish trend and potentially generate profits from the expected price drop. Given the price trends and forecast for Render, a short-term investment strategy appears most suitable. The historical prices indicate a fluctuating trend with recent declines, while the forecast predicts a slight upward movement, but still below the recent high. The current price is close to the support level of $6.793, suggesting a potential for a bounce back. However, the resistance at $7.542 indicates that significant upward movement is unlikely in the near term. Therefore, a short-term long position could be considered, aiming to capitalize on a potential price increase towards the resistance level. An entry price of $7 would allow you to enter the market near the current price, while leaving room for a slight price increase before taking profit. The stop loss should be set at $6.80 to limit potential losses if the price drops below the support level. The target price could be set at $7.30, aiming to capture a potential price increase towards the resistance level. This strategy allows for a relatively quick turnaround, taking advantage of short-term price fluctuations while managing risk through a well-defined stop loss. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach to navigate the anticipated price volatility. The historical prices show a downward trend, with the current price hovering near its support level of $0.2002. The forecast indicates further declines, suggesting Solana name service might drop towards $0.202. This bearish outlook in the short term makes a short position the most suitable strategy to capitalize on the anticipated decline in prices. To execute this strategy, an entry price of $0.215 would be ideal, aligning with the current price and allowing for a small margin of safety. The stop loss should be set at 22 cents to protect against any unexpected price surges. The target price should be set at $0.195, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.2002. This strategy aims to capitalize on the potential price decline while managing risk through a defined stop-loss order. Based on the provided Doge-Coin price data, a cautious investment strategy focusing on the short to medium term appears most suitable. The historical price demonstrates a fluctuating pattern, with recent dips below the $0.330 mark. While the forecast suggests a slight upward movement, it remains within a relatively narrow range, indicating potential consolidation rather than a strong bullish breakout. Therefore, a long position is recommended with an entry price around $0.325, aligning with the recent lows and offering a potential upside towards the resistance level of $0.394. The stop loss should be placed at $0.312, below the identified support level, to mitigate risk. The target price can be set at $0.365, aiming for a moderate gain while staying within the projected price range. This strategy balances risk and potential reward, allowing for capital appreciation while minimizing downside exposure in the short to medium term. PEPE's recent price history exhibits a downward trend, with the forecast suggesting further declines in the coming week. The current price hovers near the support level of $0.00000928, indicating a potential for further drops. Given this bearish outlook, a short-term investment strategy focusing on a short position appears most suitable. To execute this strategy, an entry price of $0.00001860 could be considered, aligning with the resistance level and the potential for a price reversal. A stop-loss order should be placed at $0.00001930 to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.00001710, capitalizing on the anticipated price decline while leaving room for potential price fluctuations. This strategy aims to capitalize on the short-term bearish momentum of PEPE. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, and the forecast indicates a potential further decline. While the price is currently near the support level of $0.00000211, the resistance is at $0.000222, suggesting limited upside potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.000216 aligns with the current price and the forecast. The stop loss should be set at $0.000222 to protect against any unexpected price recovery. The target price should be set at $0.000208, slightly below the forecasted lowest price, allowing you to take profits before the market potentially finds support. Given the current price trend and forecast for Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The historical prices show a downward trajectory, with the forecast predicting further declines. The forecast suggests Doge-Coin could drop from its current price to as low as $1.30, while the support price sits at $1.394 and resistance at $1.853. This indicates a bearish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position. An ideal entry price would be around $1.56, aligning with the current price and the forecasted downward movement. The stop loss should be set at $1.61 to protect against any unexpected price recovery. The target price should be set at $1.35, allowing you to take profits before the market hits major support at $1.394. This strategy capitalizes on the anticipated decline in prices while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Doge-Coin, a cautious short-term investment strategy appears most suitable. The historical prices show some volatility, but the recent downward trend and the forecast suggesting further declines point towards a bearish outlook in the short term. Therefore, a short position is recommended. An entry price of $0.00629 aligns with the current market price and the historical low point. The stop loss should be placed at $0.00649, slightly above the recent high and the support price, to limit potential losses. The target price can be set at $0.00586, taking into account the forecast and aiming to capture a portion of the potential price decline. This strategy allows for potential profits from the anticipated downward movement while managing risk through a defined stop loss. The provided price information for Near Protocol suggests a bearish outlook in the short term. The historical price data shows a downward trend, and the forecast indicates further declines over the next week. The price is currently near the resistance level of $4.912, and the support price sits at $4.609. Given these factors, a short position is advisable to capitalize on the anticipated price decrease. To implement this strategy, an entry price of $4.85 would be suitable, allowing for a small margin above the current price. The stop loss should be set at $4.95 to protect against any unexpected upward movement. The target price could be set at $4.55, which is below the support level and aligns with the forecast price. This strategy aims to profit from the anticipated price decline in the short term, taking advantage of the bearish momentum observed in the price data and forecast. First, considering the Internet Computer price history and the provided forecast, the short-term trend appears to be slightly bearish. The recent price fluctuations are relatively stable, hovering around the $10 mark. The forecast suggests a slight decline in the coming week, reaching a low point around $9.87. Given this outlook, a short position seems more suitable for capitalizing on the potential price dip. To execute this strategy, an entry price of $10 would be appropriate, aligning with the current market price. A stop-loss order should be placed at $10.10 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $9.70, aiming to profit from the predicted price decline while staying above the support level of $9.422. This strategy allows for a short-term investment horizon, capitalizing on the anticipated price movement within the next week. Based on the injective price data and forecast, a short-term bearish strategy appears to be the most suitable. The price history shows a recent peak around $25, followed by a steady decline. The forecast further reinforces this bearish outlook, predicting a drop in prices over the next week. While the support price at $19.62 provides a potential floor, the resistance at $23.33 suggests limited upward potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, around $21, with a stop-loss set slightly above the recent high at $23. This would limit potential losses if the price unexpectedly rebounds. The target price should be set at $19.62, aiming to capture the potential downside movement towards the support level. This strategy capitalizes on the bearish momentum indicated by both the historical price data and the forecast, while simultaneously managing risk through a well-defined stop-loss. Based on the provided information about BTC, the 2-week price change shows a downtrend. The forecast also indicates further declines in the coming week. The support price is relatively far away at $288.30, suggesting that the price may continue to fall. Considering these factors, a short position seems to be the most suitable strategy. To implement this strategy, we can enter a short position at the current price of $445. The stop-loss should be set at $467 to protect against any unexpected price reversal. The target price could be set at $420, aiming to capture a potential decline in the price. This strategy aims to capitalize on the bearish momentum and potential further decline in the price of BTC. Based on the provided information for THETA network, a short-term investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend with a slight downward bias. While the forecast indicates a continued decline over the next week, the price is currently near its support level of $2.035. This suggests a potential for a temporary rebound before further downward pressure. Therefore, a short position with a conservative approach is recommended. An entry price of $2.15, slightly above the current price, allows for a small buffer against immediate price fluctuations. The stop-loss should be set at $2.21, slightly above the entry price, to limit potential losses. The target price could be set at $2.03, aligning with the support level and anticipating a potential price drop. This strategy aims to capitalize on the anticipated decline while mitigating risk through a well-defined stop-loss. The provided price history and forecast for WorldCoin suggest a bearish outlook in the short term. The historical prices show a downward trend, with the forecast indicating further declines. The current price is hovering near the resistance level of $2.195, suggesting potential for a pullback. Given this context, a short position seems more appropriate to capitalize on the anticipated decline. A suitable entry price for a short position could be around $2.16, aligning with the recent price action. The stop loss should be set at $2.22, slightly above the current price, to protect against unexpected upward movement. The target price could be set at $1.97, which is a significant support level based on the historical data and aligns with the forecast's lowest price prediction. This strategy allows for potential profit from the anticipated price decline while managing risk through a well-defined stop loss. Based on the provided information for Hooked Protocol, a short-term bearish investment strategy appears most suitable. The historical price data reveals a clear downward trend, and the forecast predicts further declines. While there isn't explicit support or resistance information, the consistent downward movement suggests a weakening trend. Considering this, a short position would allow you to capitalize on the anticipated price decrease. An entry price around 37 cents could be considered, aligning with the current price and recent lows. The stop loss should be set slightly above the entry price, at approximately 38 cents, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at 33 cents, based on the forecast suggesting a decline towards that level. This strategy aims to take advantage of the short-term bearish momentum in Hooked Protocol. Artificial Superintelligence Alliance's price history shows a fluctuating trend, but the recent forecast indicates a downward movement. The price is currently near the resistance level of $1.279, which suggests that the upward momentum might be weakening. The forecast prices are consistently below the current price, signaling a potential bearish trend in the short term. Considering this information, a short-term investment strategy focusing on a short position seems appropriate. An entry price of $1.30 would allow you to capitalize on the potential price decline. The stop loss should be set at $1.32 to minimize potential losses if the price unexpectedly moves upwards. The target price could be set at $1.22, aligning with the lowest predicted price in the forecast. This strategy aims to profit from the anticipated price decrease while managing risk through a defined stop loss. Polkadot's recent price history shows volatility, with fluctuations between $6.40 and $7.76. The forecast, however, suggests a downward trend, with prices potentially dropping to $6 in the coming week. This bearish outlook, coupled with the support price at $5.992, indicates a potential buying opportunity for a long-term investment strategy. Given the forecast, a long position on Polkadot could be considered. An entry price around $6.40, slightly above the predicted low, would allow for a potential margin of safety. The stop loss could be placed at $6.25, a level below the support price, to minimize risk. The target price would be set at $7.50, a level above the recent high, aiming to capitalize on a potential price rebound in the long term. This strategy capitalizes on the potential for a price recovery while managing risk through a well-defined stop loss. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach, taking advantage of the potential for a small price rebound. The historical prices show a downward trend over the past 2 weeks, with the current price hovering near the support level of $4.768. The forecast predicts a further decline in the coming week, suggesting that Filecoin may be oversold in the short term. Therefore, a long position is advisable for a short-term investment strategy. An entry price of $4.95 aligns with the current price and allows for a potential upside move towards the resistance level of $5.216. The stop loss should be set at $4.78, slightly below the support level, to minimize potential losses if the price continues to decline. The target price should be set at $5.15, capturing a modest profit if the price rebounds towards the resistance level. This strategy aims to capitalize on a short-term price reversal while managing risk effectively. Based on the provided information for Conflux, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines. The current price sits near the resistance level of $0.149, suggesting a potential for a pullback. Therefore, a short position is recommended. An entry price of $0.147 aligns with the current price and the resistance level, while a stop loss at $0.158 acts as a safety net against unexpected price increases. The target price should be set at $0.1333, the support price, to capitalize on the anticipated price decline. This strategy aims to profit from the short-term bearish momentum while minimizing potential losses. Based on the provided Ethereum name service price information, a cautious investment strategy appears appropriate. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines. The price is currently hovering near the support level of $23.53, suggesting a potential for further drops. Given this bearish outlook, a short position on Ethereum name service seems more advantageous. An entry price of $31.50 would allow for entry near the current price, while leaving room for a potential pullback before entering the short position. The stop loss should be placed at $32.36, the resistance level, to minimize potential losses if the price unexpectedly surges. The target price could be set at $23.53, the support level, aiming to capture the potential decline in price. This strategy focuses on a short-term perspective, capitalizing on the anticipated price movement within the next few days or weeks. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $33.06. The forecast suggests Avalanche could continue to decline, reaching as low as $34 in the coming week. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $36 would allow you to buy in near the current price, aligning with the forecasted price. The stop loss should be set at $37 to protect against any unexpected price recovery. The target price should be set at $33, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $33.06. Based on the provided price history and forecast for Doge-Coin, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change reveals a downward trend, and the forecast predicts further declines. While the price is currently hovering near the support level, the historical price data suggests a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve taking a short position on Doge-Coin. A suitable entry price would be around $0.0450, aligning with the current price and the downward forecast. The stop loss should be set at $0.0469 to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.043, aiming to capitalize on the predicted price decline. This strategy aims to profit from the anticipated short-term weakness in Doge-Coin while managing risk through a well-defined stop loss. Based on the provided information for PENDLE, a short-term bearish investment strategy appears most suitable. The 2-week price history demonstrates a clear downward trend, with the price dropping significantly from $5.57 to $3.96. This downward momentum is further supported by the 1-week forecast, which predicts continued declines, reaching as low as $3.67. The support price at $3.693 indicates a potential floor for the price, while the resistance at $3.887 suggests an obstacle to upward movement. Therefore, I recommend a short position on PENDLE. An entry price of $4, aligning with the first forecast price, would be appropriate. The stop loss should be set at $4.27, slightly above the recent price low, to minimize potential losses. The target price could be set at $3.693, the support level, aiming to capture the anticipated price decline. This short-term strategy capitalizes on the prevailing bearish sentiment and aims to profit from the expected price drop in PENDLE. The sandbox's recent price history shows some volatility, with a slight downward trend over the past 2 weeks. The forecast suggests a continuation of this trend, with prices expected to hover around the 56 to 57 cents range. Considering these factors, a short-term bearish strategy appears most suitable. To implement this strategy, an entry price around $0.604 could be considered, aiming to capitalize on a potential price decline towards the forecast range. A stop loss at $0.622 would protect against unexpected upward movements, while a target price of $0.553, slightly above the historical low, could offer a reasonable profit margin. This strategy focuses on capitalizing on the short-term bearish outlook for the sandbox, with a defined risk and reward profile. Given the provided price history and forecast for Decentraland, a cautious investment strategy is recommended. The historical price data exhibits volatility with no clear upward or downward trend. The forecast suggests a slight downward movement over the next week. Considering the potential for further decline, a short position appears more suitable. An entry price of $0.495 aligns with the current price and the forecast's projected decline. The stop loss should be set at $0.503, slightly above the current price and resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.466, the lowest forecasted price, allowing for profit taking before reaching the support level. This strategy prioritizes risk management by establishing a defined stop loss and aims to capitalize on the anticipated downward price movement. Based on the provided ENG coin price information, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data shows a downward trend, and the forecast indicates continued declines over the next week. The current price is hovering near the resistance level of $0.209, suggesting a potential for further downward movement. Therefore, an aggressive short-term strategy would involve opening a short position at the current market price, with a stop-loss order placed slightly above the recent high of $0.248 to limit potential losses. The target price could be set around the support level of $0.1616, aiming to capitalize on the anticipated price decline. This strategy leverages the short-term bearish outlook indicated by both historical price data and the provided forecast. Based on the provided data for Uniswap, a cautious investment strategy is recommended. The 2-week price history shows a volatile trend with a slight downward bias. Although the forecast predicts a continuation of this downward movement, the support price at $11.099 suggests a potential floor for the price. Given this uncertainty, a short-term investment perspective is advisable to limit exposure to potential downside risks. A long position is not recommended at this time due to the prevailing bearish sentiment indicated by the price history and forecast. An entry point at $12.50, slightly above the current price, would allow for a small margin of safety. The stop loss should be placed at $13 to protect against any unexpected upward price movements. The target price could be set at $11.50, aiming to capture potential downside movement towards the support level. This strategy allows for a limited risk exposure while attempting to capitalize on the anticipated price decline. Based on the provided Chainlink price data, a cautious approach is recommended for this investment opportunity. While the historical price shows a slight downward trend, the forecast suggests a continued decline, with prices potentially dropping below the current support level of $17.87. Considering the risk associated with a potential further decline, a short position on Chainlink appears to be the most suitable strategy. To mitigate risk, an entry price of $19.50, slightly above the current price, is recommended. This allows for some room for price fluctuation before entering the short position. The stop loss should be set at $20.45, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $17.80, slightly below the support level, aiming to capture potential downward momentum. This strategy prioritizes risk management and capital preservation while aiming to profit from the anticipated decline in Chainlink's price. Given the price trends and forecast for Aave, a cautious investment strategy would focus on a short-term approach to navigate the current price uncertainty. The historical prices show a volatile trend, with recent dips suggesting potential short-term downside. The forecast indicates a slight downward trend over the next week, further supporting a cautious stance. The support price at $282.81 represents a key level to watch, as a break below this level could trigger further declines. Therefore, a short position is advisable to capitalize on the potential for a price decline. An entry price near the current market price, around $288, would allow for immediate participation in the potential downward move. A stop loss should be set at $294.63, above the current price and resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $282.81, aligning with the support level, allowing for a potential profit before the price potentially finds support. Given the price trends and forecast for EOS, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a volatile pattern with recent declines, and the forecast indicates further downward movement. The price is currently close to its support level, suggesting a potential for a bounce, but the overall trend is bearish. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive entry price could be around $0.790, aligning with the recent price action and slightly above the support level. The stop loss should be set at $0.804 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.740, considering the forecast and aiming to capture a significant portion of the potential downward movement. This strategy allows for potential profits while managing risk through a well-defined stop loss. Tron's recent price history shows volatility, with a downward trend in the past 2 weeks. The forecast indicates continued downward movement, suggesting a bearish outlook for the short term. Considering the price information and the forecast, a short position on Tron appears to be the most suitable strategy. To execute this strategy, we would enter a short position at the current market price, which is around 24 cents. The stop loss should be placed above the current price at $0.2444, the resistance level, to limit potential losses if the price unexpectedly rises. The target price would be set at $0.1942, the support price, aiming to capitalize on the anticipated price decline. This strategy focuses on short-term gains by leveraging the bearish momentum predicted by the price forecast. Given the historical price data and the provided forecast for Suncoin, a short-term bearish strategy appears to be the most suitable. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support price at $0.02003 suggests a potential floor for the price, but the resistance at $0.02302 indicates a significant barrier to any upward momentum. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $0.0230 could be considered, aligning with the current price and offering a margin for potential price fluctuations. A stop loss at $0.0240 would help to limit potential losses if the price unexpectedly rises. The target price should be set at $0.0195, slightly above the support price, allowing for profit taking while leaving room for further price adjustments. This strategy aims to capitalize on the short-term bearish trend in Suncoin and mitigate risks through a well-defined stop-loss mechanism.